what they are asking us is what they say that it is basically what happened. This is see, we have to understand what we are doing. Is that payment in arrears? Payment in arrears means we are going to pay at the end of the year. Is it right? At the end of the month. At the end of the month. It's fine. Now, on January 1st, Dynamic entered into 2-year lease. Is that lease period is how much? Lease period is 2 years. Is it? Lease period is lease. Lease payments are how much? When we are talking about the lease payments are, see, for 1 to 2 years, is it right? For 1 to 2 years, is it right? It is how much? It is 10,000. Is it right? And for the third year, is it right? For the third year, it is how much? It is 15,000. All payments are due at the end of the year. They will not say it is the beginning, it is in advance, or it is in arrears. They will say that it is the end of the year. When we say it is the end of the year, it means that we are talking in terms of arrears. Is it right? We are talking in terms of arrears as such. Fine. The present value, see here already they have calculated. Is it right? The present value of lease payments are how much? The present value of lease payments is 31,552, and they have initial cost also. Is it right? Initial cost has to be added. Okay. Initial cost is how much? Initial cost is how much? 3,000. Total will come to how much? 34,552. Is that? Now what they are asking us, they are only asking extracts. Okay, means just you have to mention how we are going to show it in the profit and loss account and how we are going to show in the balance sheet. Okay, when we say it's a balance sheet, it is a, see, when we are talking in terms of balance sheet now, what happens? Statement of financial position. Statement of financial position. In the statement of financial position, two components will be there. You have to show both with respect to current assets and current liabilities and non-current liabilities. Fine. We have to differentiate it. Now, how much is it? Is for 2 years. Is it right? We have started when? January 1st, 2001. January 1st, 2001. Is it? Now, first what you have to do, we should know what is the year-end balance. Is it right? Step 1. Is it right? Step 1. What you are doing? We are calculating what? We are calculating year-end balances. Is it right? Step 1. We want to know how much is the current liability, how much is non-current liability, how much we are going to pay interest, all those things. Is it right? Next, if that is the case, is it? First one is year. First one is year. The second one is what? The second one is, you can put it like this, opening balance. Is it? You are talking in terms of arrears. Arrears means you have, see, when there is arrears, you have to calculate. Is right? You have to calculate interest on opening balance. Is it right? This is the only difference we are going to work it out. Okay. Interest is how much? Interest at the rate of 5%, and how much you are going? We are going to have a payments. Is it right? And we are having the closing balance. Anywhere, any doubt? Yes, you stop me. Okay. I try to make sure that things will be as clear as possible. Fine. Now, when you do the things, year-end balance means what we are doing. We are talking about 31st December 2001. Okay, 31st December 2001. Year beginning balance is how much? Year beginning balance is 31,552. Is it right? Year beginning balance. We have to calculate interest at the rate of 5%. How much we'll get? Is it 31,552 times 0.05. Rizwan is not here, is it right? He told he will not attend today and tomorrow also. I don't know, Allah Kareem. It comes to how much? 1578. Is it right? 1578. Don't take decimals, round it off, nothing will happen. Okay, first first payment is how much they are paying. First payment is how much? 10,000. Lease payments, is it right? Lease payments are, this is column 1, this is column 2, this is column 3, this is column 4, this is column 5. Column 5 is nothing but 2 plus 3 minus 4. Is it right? 2 plus 3 minus 4. How much will get? 31,552 plus 1578 minus 10,000. Is it right? How much you are getting? You are getting how much? 23,000. Write down, okay? Cross check me, okay? Cross check me. That's very important. 3112 2002, second year, okay? How much is it? 23,130, okay? 23,130. How much is the interest on this? 23,130 times 0.05. Is it 23,130 into 0.05? How much you will get? One minute. 1157. Okay. How much is that? How much you are paying at the end of second year? This much. Is it right? What will be the balance? 23,130 plus 1157 minus 10,000. Okay. Balance is how much? 14287. Okay, is it clear now? This is first you have to make it sure that how we are this is the for the first year and this is for the second year. 15,000 we will come back. 15,000 how it is going to be treated. Fine. Now fine, this next what we have to do, this much we need, so that what we are doing we can understand how the things will work. Second one, is it right? We should what is the step 2? Step 2, calculate the depreciation. Is it right? Calculate the depreciation as such. How much is the depreciation? What is the present value? Present value of lease payments are how much? Present value of lease payments is how much? It is 31,552 plus initial cost. Is it right? Plus initial cost. How much? 3,000. Is it right? How much will get? 34,552. Depreciation. Is it right? 34,552 divided by 3 years. Is it right? Divided by 3 years. How much you'll get? 11,517. Is it 11,517? Good. Is it? This is the now. Is it? We have done with respect to depreciation. We have done with respect to interest also. Is it right? We have done with respect to interest also. How much is the interest we are going to pay? 1578. Is it right? This amount we will take. Is it 11,517 and we will take 1578. Okay. 11,517, 157, and we will take this also. Is it right? We will take this one also. Is it right? We'll take this one also. Fine. Next, next. Is it right? See, now I will put it very clearly here. Is it? This is with respect to what? This is with respect to depreciation. Okay. This is with respect to depreciation. This is with respect to what? This is with respect to finance cost. Okay. Finance cost. How much is the finance cost? 1. And this is what? This is the non-current liability. Is it? This is what? This is, I will write it. This is the finance cost. Okay. This is the finance cost. And this is the non-current liability. Fine. That's all we have to. We will deduct the non-current liability from 23,130. We will deduct non-current liability. Is it? What is the difference? I will put that also here. Is it right? I will put that also here. Is it? It comes to how much? See the things. It comes to, see, 23,130 minus 14,287. 14,287. How much you'll get? 3, 12, 4, 10, 8, 12, 8843. This is going to be called as a current liability. That's all. Is it? This is the basic groundwork we have done. Is it right? Now, if based on that we have to prepare the financial income statement and balance sheet. Step 3. Okay. Step 3. Extract. Okay. Extract of profit and loss account. Okay. Extract of profit and loss account 31/12/2001. Okay. 31/12/2001. What we have to write? First we have to write depreciation. Is it right? Depreciation. How much is the depreciation? Depreciation is nothing but step 2. Okay. Depreciation is nothing but step 2. How much we have calculated depreciation? 11517. Okay. Next, finance cost. Is it right? Finance cost is from where we got it? Step 1. Is it right? How much is there? 1578. Is it right? Finance cost is how much? 1578. Okay, this is what happened. Next, step 4. Is it right? Step 4. Extract. Okay. Extract of statement of financial position as on 31/12/2001. Okay. Fine. Next, what happens? First, we don't have anything. Is it right? We have non-current assets. How much is the non-current assets? Non-current assets value we have calculated. How much? Is that step 2? Is that this is non-current assets? Is it right? This is what? This is non-current assets. Is that this is the non-current assets? How much is the? Is that step 2? Is that how much is the non-current assets? 34,552. From these non-current assets, we have to deduct what? Depreciation. Is it right? We have to deduct depreciation. How much is the depreciation? 11517. Is that 11517? It comes to how much? 12 minus 1552. 4 minus 1, 3.
23035.
How much?
23035.
2302. This is what? This is the non-current assets. Okay. This is the non-current assets. Now, what is the non-current liability? What is the non-current liability? We have done non-current liability. How much is the non-current liability when we are talking in terms of lease payable? Is it in terms of lease payable? We have calculated here. How much is there? 14,287. Fine. It is like it is step 1. Step 1. 14,287. Is it? Current liability. How much again? Is it current liability? Lease payable. Is it? Lease payable current year. Okay, lease payable, how much we have current liability? 884. Now you understand, when we put, where this is the best way of doing, is that whenever we will put step 1, step 2, step 3, step 4 like this, what will happen? It will be easy for us when we want to make the summary at the end of the question. Is it clear?
From where you bring the lease payable in 843? Okay, so
Fine? Good. Next. Right? Now, what it says the right of use of asset. Is it right? When we have the right of use of, is measured using, there is a, basically when we say right of use means what is the conditions. Is it right? We are talking, when we are saying right of use of asset measured with cost model, unless another measurement model is chosen. This means that asset is always measured at initial cost less accumulated depreciation. Is it right? Now, if you have to put, is it right, when we are taking the value of the, is it right, when you are talking in terms of right of use of asset, is it right? What will happen? See the thing. Will make into consideration the initial cost. Is it right? Initial cost. Next we said accumulated depreciation, the depreciation of all the years. Is it right? The depreciation of all the years we have to remove it. Is it right? Next, what happens if there is any impairment losses? Is it right? If there is any impairment losses, then only we are making it, what we are saying, it is based on what? It is based on cost. Is it? It is based on cost. Is it? This will make sense. Means at that time we can have the concept where we can make it a part of ownership. Okay? Make it a part of ownership means how, when we can retain it. If ownership of the asset transfers to lessee at the end of the lease term, then depreciation should be charged over its use. Means what happens? Basically, it happens. Is that we are taking the asset on lease. Okay, we are taking the asset on lease. Fine. When we take the asset on lease, assume, take for a small example. Is it right? We are taking for how many years? We are taking for 3 years. Is it right? We are taking for 3 years. Now the life of the asset, is it right? Asset life is going to be how much? Assume the asset life is 10 years. Is that? But we are taking the lease for only how many years? 3 years. But what happens if the ownership is transferred after 3 years? Then the subsequent number of years should be taken into consideration. Means that we will see how it will work. Right now we are talking in terms of what? We are talking in terms of how we calculate the value of the asset when we have the right to use. Right to use means at the end of the lease period we will get the ownership, okay, based on the payment, structured payments as such. If that is not the case, if you are not getting the ownership, what happens otherwise? Depreciation is charged for the shorter of useful life. If we are not taking the if it is not taking the things, or only during lease period, okay, only during lease period, we are not talking about the things how it has to be reflected, okay, only during the lease period what we'll do, we will charge depreciation. We will charge depreciation to profit and loss account. Means in that case, what is the difference between these two? That's very important. Okay, what is the difference between two? If we are owning the asset, is it right? If we are going to own the asset after the lease period, is it right? After the lease period, what happens? The concept of accumulated depreciation will come. Is it? The concept of accumulated depreciation will come. Otherwise, we will, if we are taking for what we did in the last calculations, is it right? We will calculate the depreciation for a particular period. We will show it in the profit and loss account and just we leave it off. Okay, the right of use of asset. Just give me time. I will explain you related to the illustration example. Okay, now sale and lease back, is it right? Sale and lease back. See, this happens in most of the cases, is it right? Most of the, now the business is done on this basis only. Why happens? See, when you have the asset, is it right? See, you have the asset. Assume you are doing business. Very simple. You have the asset of how much? 100,000 reals. Is it right? You will sell it. Is it right? You will sell it for 1,000. Is it? Assume the life of the asset is how much? 10 years. Is it right? The life of the asset. What you will do? Then you will take it on a lease. Okay? Means this you are converting into cash. Is it right? You are getting cash from the sale. Fine. Then the same asset, they will take it on the lease. Assume they will not pay lease as that much. They will say that they are paying lease for how much? They are paying lease only for 5,000 reals. Most of the businesses, if you take into consideration, they will do like this. They will sell it. Property, they will sell it. They want cash, as simple as that. Is it right? They want cash and they want the asset also. Is it? They want the cash. That is the reason. If you take into consideration, most of the things, they will have what? They have a leasing companies. Is it right? They have the leasing companies in the market. Is that what the leasing companies will do? Leasing companies will buy the asset and again in return they will lease the asset maybe to the same company or to any other company. Is that? We don't need, what is the reason? First understand. Is that? We don't need the asset for all through the year. Is it right? We don't need the asset for all through the year. We need asset for only 6 months. Is it right? Why we will pay for why we will retain it for full year? Is it right? Why we'll retain it? Why we own it? There is no point of owning. Is it right? We need, is it right? We need assets for only for how many months? We need only for 6 months. Is that you have to be very calculative. Is that? You have to be very calculative. You have to be very specific. Is that? I cannot say that, but how best we can get the results, that's very important. Then what we'll do, you sell the assets, you will take it on the lease. assume even you are taking it on the lease of 10,000, is it right? What will happen? You will pay only for 6 months, is it right? You will pay only for 6 months. Other months, fine, we are not concerned about that, is it right? That is the concept. If the entity, the seller or lessee transfer an asset to another company and then lease it back from the buyer, the seller must assess whether the transfer should be accounted as a sale. Is it whether it is sale or it is not a sale? For this purpose, the seller must apply what? Here you have to be little bit specific. IFRS 15. Revenue from contracts with the customers. See, if you, yesterday we have experienced, is it right? If we know these rules, we can make the multiple choice questions easy, is it right? What IFRS 15 says, whether a performance obligation is satisfied. It is whether we are talking about it is any, you see, it should generate revenue from that asset. Normally occurs when buyer obtains control over the asset. Is that means if you are selling the asset, the ownership has to transfer. Is it right? We should not say that conditional transactions should not be there. Okay, I will write here for this conditional. Is it a conditional sale should not be there. Is it right? Control and what they have very clearly defining, is right? See, what in the multiple choice questions, very carefully they will ask you the which two conditions will be satisfied. Is it right? Now you have the idea about the questions, how it will come. Which two conditions have to be satisfied? Then they say that they will give 4 conditions and 2 conditions will be, one is from with respect to performance obligation, the second one is with respect to the ability to obtain the remaining benefits. Is it right? That is the reason. Is that this is where the second one is what? The second one is control of the asset refers to the what it obtains substantially. You have to get all the remaining benefits. Definitely, is it right? You are buying the asset. Means buyer is going to get all the benefits. What is the all the benefits? Where is it right? When we say what are the benefits? A simple benefit is it right? The disposal value. Is it right? The disposal value. The benefit of what? The benefit of the residual value. Is it right? The benefit of the residual value. These are the benefits naturally. Is it right? The buyer has to get. Is it right? Two things are very clear with IFRS 15. It is there in the question. That is why I am highlighting it. What is the IFRS 15 condition? There is a performance obligation has been satisfied. The second one is the buyer has to have a control for remaining all the benefits as such. If transfer is not a sale, then the seller lessor continues to recognize the transfer assets as a financial liability. There is no issue as such. If there is no transfer, is not a sale, then we will have what we have a lessor and lessee relationship. That's all. Is it right? We don't have anything which is going to be concrete. The only thing is when it is going to be sale, and then we will take the lease back. See what happens? Sale. Assume that you are selling the product. Don't expect that you will get any benefit. When you are selling the product, the transaction is going to be closed from your side. You are no more entitled to a ownership as such. That is the difference between sale and lease back and only a transfer. What is the formula they say? Is it right? Just keep it in mind. Fair value of the lease liability divided by sale proceeds into previous carrying. If the transfer does not qualify as a sale, then the seller lessee must measure it on the basis of what? Right of use of asset. Means you right. What is the right of use of asset? Right of use of asset is, see, as simple as that. You are taking a car for rent. Is it right? You are taking a car for rent. What happens when you take the car for rent? You are entitled. We are entitled for that specific period only. That's all. Is it right? We are entitled for a specific period only. We are not entitled for subsequently. If the moment we return it back, definitely things will the contract will end. Is it right? If the transfer is a sale, is it right? If the transfer is a sale, then the seller lessee measure of right of use of asset. Is it whatever the carrying amount? See what happens. Transfer is a sale. Assume. Take example. That's very important. The cost is how much? The cost is 15,000. Okay. Is it take the example of a car. Cost is 15,000. Is that you have a depreciation? Is that depreciation is going to be 7,000? Is it life is going to be 5 years? Okay. I'm just taking a day. Okay. This is after how many years? Depreciation for 2 years. Now what happens? The carrying amount is how much? The carrying amount is 8,000. Is it right? The carrying amount is 8,000. Now what happens? This much we are entitled for our claim. Okay. That was it said. What it says? The previous carrying amount relates to the rights retained. The initial value of the right is therefore what? Then we have to say what is the fair value of the liability divided by lease assets. Is it? We will do this unless until we will not work out on that, we will not have clear understanding. What it says that the seller lessee will recognize based on what? On the rights transferred as on that date. Is it right? Definitely, if you are having a carrying amount of this much, you are going to sell it. Is it right? Either you will sell it at profit or you are selling at loss. Is that? You are selling at higher price or you are selling at a lower price. Is that? Then based on that value only, assume, take an example very clearly that the carrying amount is 8,000 and you are selling at how much? You are selling at how much? The selling is at 9,000. Definitely. Is it? Then the subsequent measurement should be done based on 9,000. Is that we have done in lecture 6? Is it right? We have done in lecture 6 in terms of what? In terms of revaluation. Revaluation in terms of what? In terms of whenever we are doing revaluation, we have to calculate the depreciation on the revalued amount but not on the previous amount. The same principle what we have done there, we are going to apply here also. That is when transfer is a sale. There should be two things. Is that transfer is not a sale, transfer is a sale. When transfer is not a sale, you will have current liabilities, non-current liabilities, profit and loss account, all those things will be there. When transfer is a sale, definitely you have to agree. Why transfer is a sale? The buyer who is buying the asset has to reflect it in the statement of financial position. Is it right? Then the as an asset, is it right? As an asset he has to show. That is the reason we are very particular about this aspect. With this example we can have more clarity on that. Is it right? Now on January 1st 2001, is it right? January 1st 2001, the painting sells an item of machinery to collage for its fair value is how much? Fair value is 3 million. Is it right? The asset has a carrying amount. How much is the carrying amount? Carrying amount is 1.2 million. Fair value is more, carrying amount is less. Is it right? Now you can understand what are the results. The sale represents the satisfaction of the performance obligation. IFRS 15 condition is satisfied. in accordance with IFRS with the customer. Painting enters into a contract with collage for right to use the asset for how many years? For the next 5 years. Is that means painting is selling the asset to the collage, but what happened? They enter a contract with the collage that we are going to use the asset for next 5. Annual payments are how much? Annual payments are 500,000 at the end of each year. Is it right? At the end of each year means what? It is going to be called as arrears. The interest rate is how much? 10%. What is the present value of lease payments? Are 1.9. The remaining useful life of the remaining of is much greater than the lease term. Is it? That is much greater than the lease term. Now what you have to do? We have to make, is that they have sold it for how much? They have sold it for 3 million. Sorry, sold it for how much? Fair value is how much? 3 million. Sells an item of machinery to collage for its fair value of how much? 3 million. The carrying amount is how much? 1.2 million. What they are asking us? Explain how the painting will account the transactions as on January 1st, 2001. Is that as on January 1st, 2001. Present value of lease payments. How much? Present value of lease payments is 1.9 million. Is it 3 million, 1.2 million, and annual payments are how much? Annual payments is equal to how much? How they have mentioned? Something they have mentioned in dollars, something they have mentioned in pounds. This is not in pounds, this is in dollars only. Is it right? Well, annual payments is how much? 500,000. Fine. Annual payments are how much? 500,000. We are talking about what? We are talking only for on 1st January 2001. Okay. Now what they have said, see the things. What they say, see, painting, is it right? I will put one line here. Is it right? I'll put one line here. What they're saying, see, painting has sold, is it right? Painting has sold, is it right? Now when they have sold, they should not show it as any asset, is it right? They should not show it as, but what happens? They have sold it and they have entered, see, they have sold it and entered a contract for right to use, is it right? That's what it says. Enter a contract for right to use, is it right? And we are showing in the books of what? We are showing in the books of painting. Is it right? In the books of painting. Now, how much they have present value of lease payments? Is it present values of lease payments? Is it present value for lease payments are how much? Present values of lease payment of 1.9 is a liability. Is a liability as such. Now, how much see, they have so is it right? Fine. Present value of lease payments is 1.9 is a liability. Value of the asset is how much? The sale value. In the books of painting, what is the sale value? Sale value, is it right? Sale value is how much? Sale value is 3 million. Is it right? Sale value is 3 million of this. In this, they have to pay. Is it right? They have to pay. Is that annual lease payments? Annual lease payments. Is it annual lease payments? Means net proceeds how much there? They have to pay annual lease payments of how much? 1.9 million. The balance is how much? Balance is 1.1 million. This is nothing but the sale proceeds. See, they are getting 3 million. Is it right? They are getting 3 million. Of the 3 million, annual lease payment, because they are going to have, they are going to take it on the lease. Is it right? They are entering a contract with respect to the right to use. Is it right? Right to use. Is that as a lease? Is it right? Right to use as a lease as such. Is that is the reason? See, sale value is 3 million and 1.9 is the annual lease payment. You will get how much? It is 1.1. Fine. Next. How much is the carrying amount? The asset is how much is having a see, this is step 1. Okay, make it clear so that by the time we will work it out. This is step 1. Okay, this is step 1. Next, step 2. Is it? What is the carrying amount? Carrying amount is, we have to know how much is the transactions. We have to show it on 1st of January. Is it right? 1st of January, how much we have to show? Actually, how much we got the profit as such. Is it right? When say how explain how pointing will account transaction means how much profit or loss incurred on the transaction. Is it right? What is the profit? Now, carrying amount is how much? Carrying amount is 1.2 million. Is that carrying amount is 1.2 million? What we have to do? We have to calculate how the carrying amount is going to be distributed within the lease payments. Okay, within the lease payment, how much you are paying? Annual lease payment is how much? Annual lease payment is how much? Annual lease payment, is that annual lease payment? Is it right? Annual lease payment is how much? It is 1.9. Is it right? Total annual lease payments. Is it right? Annual lease payments. It's 1 minute. present value of annual lease payments. Present value of annual lease payments are how much? Present value of annual lease payments is 1.9 million. Is it? Present value of annual lease payments is 1.9. What is the sale value? Sale value is 3 million. What we are doing here? We want to distribute this. Is it right? We want to distribute this among the annual lease payments. Is that we want to split this amount? Is that how we can distribute it equally? Fine. How we are going to distribute it equally? Carrying amount. Is that carrying amount? As we are what we are doing, carrying amount, as we have to work it out with respect to what? Right to use. Is it right? Carrying amount in terms of what? Right to use. Is that carrying amount in terms of right to use of asset? Is it? What is how you have to do? You have to make it a point that present value of annual lease payments. See, carrying amount of right means if you are selling it, is it right? You are selling the asset. Now you are taking it again on lease back, is it right? Then we should know what is the amount we have to, what is the right of use. If you are using it, how much we have to pay for that, is it right? Present value of annual lease payments, is it right? Present value of annual lease payments divided by, is that present value of annual lease payments divided by what is the sale value? Sale proceeds. Is that sale value is how much? Sale value is 3 million in times carrying amount. Is that carrying amount in the beginning? Is it carrying amount prior to sale? Carrying amount prior to sale. This is carrying amount prior to sale. Is it? Little bit. One, just give me time, okay? How much is present value of annual lease payments? Present value of annual lease payments is 1.9 million. Sale value is how much? 3 million. Is that right? And carrying amount prior to sale is how much? 1.2 million. How much we will get? 1.9 divided by 3 times 1.2. Is that how much you'll get? 0.76 million. Is that 0.76 million? This is what? This is nothing but carrying amount as per right to use. Are you clear about this? Step 1 is sale value. Is a sale proceeds we have done. Second thing is there is a carrying amount before sale and carrying amount right to use after sale. Is it right? Is that whenever we are talking about after sales, we have to be what is the annual payments we are doing divided by the we are getting this much sale. Is it right? On this much sale, how much we have to pay annual payments, and what is the carrying amount prior to sale assets. Next is a continuation to this. Again we have disposed it off. Is it right? how much we got sale proceeds, is it right? We got how much we got carrying amount on disposals, is it right? Carrying amount on disposals also, is it right? Disposals also. How much we got sale proceeds in terms of cash, we got it, is it right? We have the sale proceeds. Put one dash here. Put one dash here so that you should make it a point, is it right? This is step 3. In the end, we will integrate all these things, is it right? Step 3. How much we got it? Sale proceeds. Sale proceeds is disposals, rights to use, is it right? Is that the same thing will happen, is it right? We are talking in terms of sale proceeds, is it right? Sale proceeds divided by what? Divided by sale value. Is that? Divided by sale value. Again, carrying amount prior to sale. Sale proceeds are how much? Sale proceeds are 1.1 million. Is it right? Sale value is how much? Sale value is 3 million. Times. If it is you are finding it difficulty, again I will explain you somewhere down the line. Okay? Just keep it in mind. That I am putting as much as possible. How much is there? 1.2 million. It comes to how much? 1.1. See, is that how much on the disposals? How much you can claim it? Is it right? On the disposals, how much you can claim it? That's very important. We are talking about on the use, how much you have to pay, and disposals, how much we can claim it. Is it right? That is the purpose of doing this calculation. It comes to how much? 1.1 divided by 3 times 1.2. 44. Is it a 0.44 million? Is that 0.44 million? This much we have to understand how we can segregate. Is it right? Now, fine. We are selling it. Is it? We are selling it on January 1st, 2001. Is it right? We are selling it how much? January 1st, 2001. Is it right? Now, what are the transactions we are doing? That's very important. Is that what are the transactions we are working it out? Is that what are the transactions? We have the present value of lease payments. Is it right? Present value of lease payments. It is there. How much? 1.9. Is that lease payments is nothing but it is a liability. Is it right? It is a liability. Is it right? We are selling off. We are carrying amount prior. We are selling off the asset. Is it right? We are selling off the asset. Is it right? That asset means what happened? Asset will decrease. Is it right? See the thing. Now you write down what are the transactions you are going to work it out with respect to this process. That's all. Is it right? Step 4. Is it right? What happened? There is a present value of lease payments. Is it right? Present value of lease payments. How much is the present value of lease payments? 1.9. Okay, 1.9. This is a liability. Is it right? This is a liability. Now you are selling off. Is it right? Selling off an asset. Is it right? Selling off an asset. What is the carrying amount? Carrying amount is how much? Carrying amount is how much? Carrying amount is 1.2 million. Is it right? What will happen because of that? Because of that, asset will decrease. Is it right? Asset will decrease. When asset is decreasing, what we have to do? We have to write it on the credit side. It is a liability. Is it right? If it is a liability, it is on the credit side. Okay? If it is on the liability, it is on the credit side. Now, what happening? You are selling an asset. Is it right? You are selling, painting is selling the asset. Is it right? There is a sale. How much there is a sale? Sale is how much? 1.9. Is it right? 1 minute. How much is the sale? Sale is how much? Sale is for 3 million. Is it right? Sale is for 3 million. Sale is for 3 million. This is nothing but it is going to be bank. It is an asset. Asset will increase. When asset will increase, it will be on the debit side. Okay. Now, fine. Apart from that, is it right? You have the right to use. Is it right? How much you are going to have the right to use? Is it right to use? Is it right? Where we have calculated this? We have calculated in step 2. How much is right to use? It is 0.76 million. It is right to use is nothing but it will be an asset. It will be an asset. It will be on the debit side. Fine. Now, okay, just I'm doing it. Okay, just I'm doing it on to know the things. Is it right? See the thing. Just for this is only for you, for our understanding. Okay, this is only for our understanding. Debits and credits. Is it right? You have the bank. Is it right? How much is the bank debit? Bank is 3 million. Fine. Bank is how much? 3 million. Fine. Next. Right to use is how much? Right to use is 0.76. Is it right? 0.76 million. Fine. Now, what are the liabilities are there? Present value of lease payments. Is it right? Present value of lease payments. How much we have to pay? We have to pay 1.9. Is it right? 1.9. Is it right? Next. We have sold the asset. Is it right? Sold the asset. Asset will decrease. Is it right? How much we have sold the asset? We have sold the asset for how much? 1.2 million. Is that we have sold the asset how much? 1.2 million. Which side is more? 3.76. It is 2 to 3.1. This is how much? 3.76. Is it? 3.76. Fine. Difference is where? Is that difference is where? Difference is on the credit side. Is it right? How much is the difference? Difference is on the credit side. How much is the difference? 3.1. 3 point, it is nothing but 0.66. What is this 0.66? What is this 0.66? It is difference on the debit side or it is difference on the credit side?
On credit side.
If it is difference on the credit side, wow, it is profit or it is loss?
Profit.
Think.
Will be loss.
remember me. Whenever you get the first idea, that is the correct answer. 99%. This is the human psychology. You should not change the answer. There is a risk. There is no doubt on that. Is it that there will is a risk? There is nothing like that. We cannot say. But the first thing what we will remember, remember with all our concentration. Is it right? Rule says that if there is a credit, is it right? Credit all income and gain. Nominal account. Nominal account says that credit all income and gain. How much is the gain we are getting? How much? 0.66 million. Is it? How much is there? 0.66 million. Fine. This is the gain we are getting. Fine. 0.66 million. Now, step, last one. We are integrating so many things. Again, once it's done, I will repeat for you. No problem. Now, what happens? Is it right? See the thing. Carrying amount disposals. Is it right? How much you are getting? 0.44. Is it right? Carrying amount on disposals. How much is carrying? Sale proceeds is how much? Sale proceeds we have done. Is it right? Sale proceeds as per step 1. Is it right? Sale proceeds as per step 1. Okay, sale proceeds as per step 1. How much is there? 1.1 million. Okay, next is it carrying amount on disposals, right to use. We have to remove that. Is it right? How much you have to remove? 0.44 million. What is the difference you will get? 0.66 million. Is it right? This is nothing but profit on disposal. Little bit challenging. Okay, little bit challenging. I will say that. I will not say it is easy. Wherever say it is easy, I will say it. I will not misguide you. Is it? What we have to do? Is it? Means that, see, these are the complications. Is it right? See, you will not sell the asset on loss anytime. Okay? You have the asset with you. Okay? You have the asset with you. What is the asset value? The value of the asset is 1.2 million. If you have doubt, you can revise this on the recording. Okay? See, very simple. You have the asset 1.2 million. Okay? You are selling the asset for how much? 3 million. Fine? You are selling the asset for how much? 3 million. See, it's not like that. You are selling the asset for 3 million, but you are taking it on a lease back. Okay? You sell the asset on 3 million, you get it on lease back, but what is the amount you have to pay as a lease payments? 1.9 million. Is it? You have, means how much amount of cash you will have with you? You will have a cash of 1.1 million. This is step number 1. Fine. Now, step number 2, definitely, is it? You should know how much you have to pay, right? If you are using the asset, how much you have to pay. Is it right? How much you have to pay? How much you are paying? Total lease payments, present value 1.9. Is it? Is it 1.9? If the, what is the value of the sale? 3 million. Is it? I will put like this. Is it right? I will put like this. It will be little bit more clarity will be there. Then I will put it in box. Okay? Don't worry about that. See, for 3 million, Is it right? 3 million sale. Carrying amount is how much? Carrying amount is 1.2. Is it right? Carrying amount is 1.2. For 1.9 million present value, carrying amount is how much? That's all you are doing. Is question mark. Is it right? Now understand, this is only we are doing this, nothing else. For 3 million, carrying amount is 1.2. Okay, for 1.9 million, what is the carrying amount? Is it right? We should always make point with respect to carrying amount. Carrying amount is nothing but the basis of financial accounting, basis of financial reporting. We cannot show the market value. Always we have to show the book values. Because we have to show the book values, we have to calculate the carrying amount. That is the reason we have done step 2. Step 3, definitely. Is it right? Again, we have to know what is the carrying amount. We got 1.1 million. Is it right? We got 1.1 million. But 1.1 million, how much we have to take it? Is it right? How much we have to take it? 1.1 million is as per the mark fair value. Is it right? Again we have to convert it. Is it right? The same rule we are using here. Is it right? For 3 million, is it right? For 3 million, is it right? Carrying amount is how much? Carrying amount is 1.2 million. Is it right? For 1.1 million, what is the carrying amount? Is it 0.44? Now what happens? You see the thing. You see carrying amount is how much you got it? You got it. The sale proceeds is 1.1 million. Carrying amount is how much? 0.44. As simple as that. The sale value minus the carrying amount is the profit on disposal. Is that the sale value minus carrying amount is nothing but the profit on disposal. Is it clear about this? Take your time, understand it, and I will wait for your response. Understand it and tell me. Wherever doubt, just let me know. they gave us a income they gave us the trial balance. Is it right? They gave us the trial balance, revenue, all those things. Fine, no problem. Is it right? They asked what? Own plant and equipment to be depreciated on reducing balance basis 20%. Property land is 60%. The depreciation is for 30 years on straight line basis. What is the condition they have put? It has to be charged to cost of sales. Is it right? You have what are the things? You have plant and equipment, you have property, you have buildings. Is it right? There are three types of assets are there. Is it right? Property is there, plant and buildings is there, and on 1st January you commence using an item of plant and machinery under lease agreement, 3 annual payments of how much? 29,000. The first payment is this much. Charged to whom? Cost of sales. The present value is how much? To 72,000. Under the terms of lease, the option to extend the lease indefinitely at a reduced rental at the end of 3 years. The plant has an estimated useful life of 6 years with a negligible value at the end of the period. The rate of implicit interest is how much? 10%. Means we have to calculate the schedule 72,000. Is it right? 72,000. What they are paying in the beginning or they are paying in the end? Under the term, the option to extend the lease at the reduced value of how much? Fine. How much they are paying? We will see how much they are paying. Is it right? The directors are estimated provision is fine 47,200. Is that what this is related to? What this is related to? This is related to depreciation. This is related to depreciation. This is related to lease. Okay. This is related to a lease agreement. Fine. And they have the provision for income tax. That's not a big issue. Okay. That is not a big issue. Now, they have mentioned anything about lease payments, revenue, cost of sales, distribution, administration, loan, property 240. Is it right? Property 240, plant and equipment 140. Is it right? Plant and equipment 140, trade receivables, inventory, bank, trade payables, share premium, retain earnings. Fine. Now, see the things. Annual payments are how much? Annual payments are, see the things. Is it right? I will write here. Is it? First we will take into consideration this one. Okay. First we will take here. What we will take? We will say how much is land is how much? Land is 60,000. Is it right? Land is 60,000. Fine. Is that first we will calculate the depreciation. Is it right? First we will calculate the depreciation. It will be easy for us. Okay. First we will calculate the depreciation. First we will calculate the depreciation, then we will calculate the lease payments, then we will calculate the cost of sales, then we will draft the balance sheet. Okay. We will do like this. Is it? Note 1. Note 1. Is it right? Depreciation. Is it depreciation? Particulars. Is it right? Particulars. You have that land. You have buildings. Is it right? You have buildings. You have plant and equipment. Is it right? You have plant and equipment. Is it right? You have, apart from that, you have the lease also. Is it right? you have the that what it says, what they have mentioned in point number 2. Commence using a item of plant and machinery under lease agreement with 29,000. The first payment means first payment 30 for charge to cost of sales. The present value is 72,000. Under the terms of the lease, the option to extend the lease at a reduced rental. The plant is estimated useful life of 6 years. Fine. It is nothing but what? It is nothing but we have to say in terms of lease. Is it right? In terms of lease, right to use. Is it right? Right to use. Now, what happens? First, you take into consideration the cost. Is it right? How much is the cost? Property is how much? Property is 240. Is it right? Property is 240. In the property, you have land also. Land is how much? Land is 60,000. Is it right? Land is 60,000. 240. Is it right? I will write this. 240, 60,000 is the land. Is it? No, I will not write. 60,000 is the land, and balance is how much? Balance 240 minus 60, it comes to 180. It comes to 180. Is that? I will put like this. Is that just for your understanding? It comes to how much? It comes to 240. Is it right? Now, plant and equipment is how much? Plant and equipment is 140. Okay, plant and equipment is how much? 140. Is it right? Plant and equipment is how much? 140. And how much you are paying lease? Lease we are paying every month. How much? 1 minute. How much is the total lease? The present value of the lease payments was how much? 72,000. Fine. How much we are paying? 72,000. Fine. Now, is it right? Fine. Slowly we will do. Okay. Now, they have already done accumulated depreciation. Is it right? How much is the accumulated depreciation? 40,000 and 40. On the land, there will not be depreciation. Is it right? On the land, there will not be depreciation. Is it right? Accumulated depreciation. On the land, there will not be any depreciation. Okay. On the buildings, how much is the accumulated property? On the buildings is 40,000. Is it right? On the plant and machinery, it is how much? 40,600. Okay. 40,600. Okay, fine. Now, how much you will get here? Is it right? Now what they are saying, that's very important. Is it right? See, they are plant and machinery reducing balance method. Property cost includes 60,000. The building is transferred on straight line method. Is it right? Is it right? See, this is what it says. Plant and equipment reducing balance method. Is it right? This is it right? Reducing balance. Depreciation on reducing balance. Is it right? And buildings is on straight line method. Okay, depreciation. Is it right? Depreciation. Now, see, straight line method, fine. No, nothing. There is no question on that. Is it right? Next, less current year depreciation. Is it right? Current year depreciation. Current year depreciation is how much? Straight line method. Is it right? Straight line method. How much is the straight line method? 180. What is the life? Life is how much? Property cost, the 30 years. Okay. How much is that? It is 30 years. Means 180. I will write here only. Okay. I will write here only. We have lot of space. Buildings. Is it right? 180 divided by 30. Is it 180 divided by 30? How much will get? How much
6,000.
How much? 6,000. Is it plant and machinery? Is it plant and machinery? How much? Reducing balance. Is it right? Reducing balance. It comes to how much? 400. 9 minus 8, 1. 13 minus 4, 91, 400. Is it right? 91, 400 times. What is the rate of interest? What is the depreciation amount? 20%. Is it? Depreciation is how much? 20%. Okay. How much you will get here? 91 400 times 0.2. 18,280. Fine. Now, see, on lease also you have to calculate depreciation. Is it right? On lease also you have, for how many years? This is lease for how many years? This is lease for 6 years. Is it right? This is lease for this year. On the right to use. Is it right? Right to use. How much is there? 72,000 divided by 6. It comes to how much? It comes to 12,000. $60,000. Is it right? How much you will get? 180 minus 40. 140 minus 6. 134. Is it right? 134,000. How much you will get? Here I need calculator. 91 400 minus 18,280. How much you will have? 73 120. Okay, 73 120. And here how much you will get? 72 minus, you will get 60,000. Okay, now depreciation is how much? 6,000, 18,200, 12,000. We have done this much only to get the amount of depreciation, and the balance amount we will show it in the balance sheet. Okay, next step 2. Okay, step 2. What will happen? We'll talk about lease payments. Is that lease payments? How it will happen? We are talking in terms of year. We are talking in terms of year. You are talking about opening balance. Is right? We are talking about opening balance. We are talking about interest at the rate of how much? Interest at the rate of 10%. Is it right? Interest at the time of, we are talking in terms of payments, and we are talking in terms of closing balance. Is it right? 31/12/2007. Okay, just correct it. I'm just putting it on the basis. Is it right? How much is the opening balance? We have how much you are paying? 72,000. Is it right? How much you are paying? 72,000. Is it right? 72,000. 72,000. Interest is how much? At the rate of 7,200. Is it right? Payment we are making how much? 29,000. Is it right? Payment is making how much? This is column 1, this is column 2, this is column 3, this is column 4, column 5 equal to 2 plus 3 minus 4. How much you'll get?
$50,200.
Good. $31,200. Any doubt? See, I'm teaching you any doubt. Anywhere you are not understanding, even the smallest of the smallest thing, just you stop me. Okay? We are putting this much effort. Inshallah, we will get success. That's very important for me. Inshallah. 2008. Is that 50,200? Is it right? For how much is the interest? 5020. Is it right? 5020. How much you are paying? 29,000. Now you understand how I am teaching. Is it right? You understand how I am teaching. It's now I can do it very easily also, inshallah. Is it right? How much? What is the balance?
26,220.
Good. Fine. This. Why we are doing this? We are doing this only to make sure that how much is the current liability and how much is the non-current liability. Okay. The purpose of doing this is only to make sure about current liabilities and non-current liabilities. Fine. Is it right? Next. Okay. Now what we have to do? We have to do step 3. Okay. Step 3 is what? Step 3 is cost of sales. Is it right? Step 3 is cost of sales. That's what it says. Is it right? Cost of sales. How much is the cost of sales given? Cost of sales given is how much? Given is how much? Cost of sales. Just go through up. How much is the cost of sales? 324,000. Is it right? How much is the cost of sales? 324,000. Is it right? Cost of sales is how much? 324,000. Fine. Fine. Is it? Next. In cost of sales, what we have to add. Is it right? In cost of sales, we have to add what? We have to add depreciation. Is it right? Depreciation on where? Depreciation on buildings. Is it right? Depreciation on buildings. How much depreciation on buildings? We calculated 6,000. Okay. Depreciation on plant and machinery. Is it right? Depreciation on plant and machinery. How much? 18,280. Is that depreciation on lease? Okay. How much you have calculated? It is 12,000. Fine. Apart from that, is it right? This is with respect to note 1. Okay. This is with respect to what? This is with respect to note 1. Fine. Now, you see point number 2. What they are saying? They are saying that point number 2, line number 3. Line number 2. Point number 2, line number 2. The first payment was made on 31st May 2001 and has been charged to what? Charged to cost of sales. Is it right? Charged to cost of sales. When it is charged to cost of sales, you have to deduct that. How much is the lease payment? Lease payment is how much? Lease payment is 29,000. Is it right? Refer. I am putting refer point 2, line 2. Understand point? Point 2, line 2. How much you will get this? Tell me fast. $324 plus 6,000 plus 18,280 plus 12,000 minus 29,000. 331,280. 331,280. This is called as revised cost of sales. Any doubt? Ask me. See, inshallah, take your time, revise it. Okay, revise it. I will send you immediately. Once it's done, I will send you the file also. Okay, revise it, inshallah. Okay, that's all. Nothing is there now. Is it right? Nothing is there now. Almost we have done with the things as such. Is it right? We have done lease. How much is the lease? 26 to 20. Is it right? This is what? This is the lease. Is it right? This is what? This is non-current liability. Okay, non-current liability. We will see this. Oh, not good. Is it right? 1 minute. Is it right? This is non-current liability. Is it? This is non-current liability. Okay. What we have done? We have done depreciation. We have done. We have done the current liability is how much? Current liability is how much? Current liability.
23,980.
How much?
23,980.
Exactly. I really appreciate your efforts. Is it right? 26 to 20. It comes to how much? It comes to 23,980. Is it right? Current liabilities. Before we start preparing the income statement, we have to make sure we have current liabilities, cost, all these things. Is it right? We have depreciation, we have the finance cost is also there. How much is the finance cost? This is the finance cost. Okay, this is the finance cost. Fine. Is it right? Now it's very it's simple. Is it right? You put like this. Fine. Okay. Now, is it statement of profit and loss for the year ending 31st. Where is that? Where they are talking in terms of 31st May 2007. First, sales. How much is the sales? How much is the sales? Sales is how much? Sales is 630. Okay. Sales is how much? 630. Sales is how much? 630. Less cost of sales. Is it right? Less cost of sales. Step 3. Is it right? Less cost of sales. How much? 331 to 80. Is it 331 to 80? How much you'll get? 0 2 7 9 8 12 3 9 5 2. Is it right? 298 720. This is
Yes, it's right.
This is gross profit. Is it right? This is gross profit. Next, what is there? You have distribution cost. How much is distribution cost? 19,800. Okay, this is distribution cost is how much? 19,800. Okay, distribution cost is that distribution cost. Distribution cost is how much? Put it 19,800. Okay, next you have administration expenses. Is it right? You have administration expenses. Admin expenses. How much is the admin expenses? Admin expenses are 15,600. Okay, how much? 15,600. you have loan interest, is it right? Paid, already paid, is it right? You have loan interest paid, is it right? Loan interest paid, how much? 6,800, is it right? You have another finance cost, is it right? You have finance cost, is it right? How much is the finance cost? Where we have calculated finance cost in step 2, okay? In step 2, how much is the finance cost? 7,200, is it right? 7,200. Anything else? Loan, property, plant, trade, investment, opening, inventory, that is closing inventory, okay? Here they have given what? They have given only, see, closing inventory, is it right? See, people will not tell you this, okay? When there is a closing inventory given in trial balance, write down anywhere, is that separately. Again, I will remind you whenever we come to this point. If the closing inventory is given in trial balance, we should show only in current assets. Okay, we have to show only in current assets. If it is given in adjustment, then we have to show in both the places, profit and loss account and cost of, is it right? And in the current assets. But if it are given in trial balance only, we have to show it in the balance sheet only, current assets. Okay, very few people will tell this. I have good experience about this, is it right? The reason is, now I will give the reason also. The reason is, if it is given in that adjustment, it means it has been done after 31st of December. If it is given in the trial balance, means it has done before 31st December. That is the reason we have to be very careful. Is it right? Now, how much will come here? We don't have anything. How much you will get here? Just tell me. My handwriting is not that much good, okay? 298,720. 298,720 minus 19,800 minus 15,600 minus 6,800 minus 7,200. Is it right? How much will get? 249,320. Okay? How much? 249,320. Is it right? This is profit before tax. They have said tax also. Is it right? They have said tax also. In some way down the line they have mentioned. Is a point number 3. Is it right? They have said tax. Point number 3. Okay? How much is the tax? 7,200. Minus 7,200. It comes to how much? 242,120. Is it right? 242,120. This is nothing but profit for the year. Is it right? Now, see, I will use like this, okay? I will use like this. I need space. I don't know. I have no. Why I have? Is it right? Next, statement of financial position as on 31st May 2007. Okay, this is what this is. Okay, fine. Put like this. Step 3. This is step 4. Is it right? This is step 4 and this is step 5. Fine. Now, You put like this, particulars, is it? Particulars, amount. First, is it assets? Is it right? Assets. How much is the asset, non-current asset? You have property, is it right? How much is the property? Property is how much? You have land is how much? 60,000. Is it right? Land is 60,000. Plus we have calculated property value. How much is the property value? 134. Is it right? Is it right? 134. Is it right? Land is property value is how much? 134. Okay. No, I will not do like this. 1 minute. We are putting so much effort. Unnecessary we for just for some reason we should not. Is it right? Fine. 1 minute. Is that property? Property is how much? Land is how much? Land is 60,000. Is it right? Land is how much? Land is how much? Land is 60,000. Is it right? Land is 60,000. Property is how much? Property is note 1. Okay? Note 1. How much? 134,000. If you add to both the things, it comes to 194,000. Is it right? Next, you have plant and equipment. Is it right? You have plant and equipment. How much is the plant and equipment? It is again note 1. Okay? Plant and equipment. How much is the plant and equipment? 73,120. Is it right? Is it how much? It is 73,120. Okay? And next, you have right to lease. Is it right? You have right to lease. Is it right? How much is there? It is the initial value is how much? Initial value is 72,000. Is it right? Minus current year. You have paid. Is it right? Current year. How much? 12,000. Is it right? How much we'll get? We'll get 60,000. Fine. Okay. 1 minute. Okay, fine. Okay, 1 month. How much you'll get? How much you'll get? 249, 320. 249, 320. Okay, this is A. Okay, this is A. Next, you have current assets. Is it right? You have current assets. In current assets, what is there? The first one is inventory. Is it right? The inventory given in the trial balance. Okay, inventory. How much is the inventory? 19,000. Is it right? How much is the inventory? 19,600. Check again. 19,600. Okay. Next. They have given receivables also. How much is the receivables? 51,200. Bank is how much? 4,300. Is it right? Receivables how much? Receivables is how much? Receivables is 51,200. Okay. Bank is how much? Bank is 4,300. Is it right? How much is the total? 19,600 plus 51,200 plus 4,300. 75,100. Okay. Total assets are how much? Total assets are how much? 249,320.
Mr. Total non-current asset.
194,720. You check this one. 190.
327,120.
How much?
327,120.
Oh, okay. You have typed like that, I have taken like that. Three 27 120. Total assets will be how much?
Okay.
402 220. Check. One to 220 7 5 12 1 10 1 4. Is it clear?
Total current asset 45,100.
How it is now? See, 19,600. These three.
It's correct, 75,100.
Okay?
Okay.
Take your time. Don't rush. Okay? Don't rush. We should have sabr. Okay? As simple as that. You should. That is the reason. I will never rush. I will take time. Okay? Is it clear now?
Yes, it's clear.
Good. Alhamdulillah. Is it right? See, you write in your notes below this. I am writing here on the right side. Okay? I am writing here on the right side. I don't have space. Is it right? Now equity and liabilities. You write as normal. Okay? Now how much is the equity? Share capital, how much is given? Ordinary shares are how much? 25,000. Is it right? How much is the ordinary shares? 25,000. Fine. Equity, ordinary shares. Fine. Next. What is there? Another thing. Share premium, 7,000. Is it right? Share premium how much? 7,000. Is that share premium is how much? 7,000. You have retained earnings also. Is it right? How much is the retained earnings? Is it right? Retained earnings are how much? See, retained earnings are this much. Okay? Where is that? Retained earnings are this much. Okay? How much retained earnings? It is 15,500. Okay? Retained earnings are how much? 15,500. 15,500. Current year profits is how much? Profit and loss account. Profit and loss account is how much? Profit and loss account is how much? 242 120. Okay? Total how much you will get? $249 $320. 240 no 289 620. Okay, 289 620. Fine. This is shareholders fund. Okay. Next, non-current liabilities. Is it non-current liabilities? You have non-current liabilities we have done. Is it a lease payable? Is it a lease payable? We have done. Is it a, I have written somewhere? No, step 2. Is it right? Step 2, 26 to 20. Is it right? Step 2. Step 2, 26 to 20. You have the bank loan. Is it right? You have the bank loan. How much is the bank loan? How much is the bank loan? 20,000. Okay. How much is the bank loan? 20,000. If you add 46,000 to 20, is it right? You have 46,000 to 20. Next, current liabilities. Current liabilities. How much is the current liabilities? One by one. Okay. You have trade payables 35,200. Is it right? Trade payables is how much? 35,200. Is it? Trade payables is how much? Trade payables 35,200. Is it right? You have the taxation also. Is it right? Income tax. Point number 3. Is it right? Point 3. How much? 7,200. Okay. Is it? You have lease. Is it right? Lease. Step 2. Is it right? Step 2. How much is the lease? Current liability is how much? Step 2. 23,980. 23,980. How much you will get? $35,200 plus 63. Thank you. 380. Total how much you will get? 289,620, 46,220, 66,380. How much? No. $289,620, 46,220, 66,380. How much you'll get? 402,220. Is it clear?
Yes, it's clear.
Fine.